You are still on the Business Lens on Rapid Television Abuja, and joining me on today's episode is economist Abiola Adekunle from Key to Markets. You're welcome.
Good to be
and
here.
Global financial analyst Daniel Effah. Okay, we are likely to have more people join us going forward, but we are going to start, and when they join, we introduce them. So let's start with the week's hottest stories, where Nigeria's fiscal path towards 2026 moved from uncertainty to guided clarity after the Senate approved 2026 to 2028 medium-term expenditure framework, the MTEF, following months of delays that disrupted the statutory budget calendar. The approved framework pegs 2026 federal expenditure at 54.46 trillion naira, with a projected retained revenue of 34.33 trillion naira, leaving a 20.13 trillion naira fiscal deficit of about 3.6% of the GDP. The Senate revised the oil benchmark downward to $60 per barrel for 2026, while sustaining crude output assumptions at 1.84 million barrels per day. Inflation is projected to moderate to 16.5% in 2026, while GDP growth is forecast at 4.68%. Debt service is estimated at 15.52 trillion naira, consuming nearly half of expected revenues as new borrowings rise to 17.88 trillion naira, while the approval restores procedural order ahead of the 2026 budget presentation. Analysts warn that delayed execution, heavy borrowing and issues might cause problems, and optimistic growth assumptions could amplify fiscal risks for businesses and households in the year ahead. Now, let me start with, I'll still start with you today, Mr. Okay. So does this approve MTEF late, but cutting the oil benchmark to $60 genuinely strengthen fiscal credibility for 2026?
Well, if you're cutting down your projections for the crude oil, means that you're actually thinking of getting less revenue from oil, but you're still keeping your midterm budget at the same. It means that probably you're looking to have a stopgap or something to fill the gap. And what easily comes to my mind, is the new tax law. So I think that one way or the other, Nigeria would have to find a way, to show up the gap in between what we have projected and the declining, revenue that might come from, lower prices in crude oil.
Okay, so Daniel, with debt service at 15.5 trillion naira and new borrowing near 18 trillion naira, how sustainable is Nigeria's fiscal structure if oil prices underperform in 2026?
I think we should use the word when oil prices, because oil prices are low.
The certainty.
Yes. See, the thing is, when you check the trend of oil prices, right, in the last 10 years, the supply has really outweighed the demand, so much so that the prices have been very low. And for the fact that the prices have been very low, what has helped in the last 10 years has been chaos. Someone, Houthi rebels blowing a Saudi pipeline, Russia and Ukraine crisis, the pandemic. Those are the pointers that really pushed oil prices up. It has never really been about the fact that there's an increased demand somewhere that has really pushed it, and that is a very, very big issue, right? So if nothing like that happens, and I've always echoed it all through the year, that I was saying oil prices, that this $60 per barrel a support line will definitely break at some point. Now, the fact that it has broken means that there is a potential $40 per barrel, or even in the short term, and that is scary. And I've seen OPEC members are saying that we have to watch cuts. Now they have to make cuts. Now if you're making cuts, that means Nigeria will be affected, right? We've not even
we that want more.
Exactly. That we've not even met up our quota. We are even thinking of asking of more. Now that plan is almost dead on arrival at the moment. And now OPEC is looking at different ways to solve, of which Nigeria will definitely be affected. So now when you look at that part of our fiscal revenue that we always love to depend on, but we don't work a lot on, right? What we're now switching back to is the taxes.
Yeah.
And this is the problem, is also the taxes. The taxes have so much exemptions that people that are paying the taxes are not as much. So those ones are extremely burdened,
yes.
Which means that you are definitely creating a consumption problem going to 2026.
Mm-hmm.
People will start not wanting to spend because You get, because when you see their assets in their account, you will take it out, right? You will assume they are making money, right? So the chaos is there, and we are seeing the budget. We are seeing 50 trillion. And I started this thing last year when we entered the era of 40-50 trillion budgets. That what is the plan for revenue, right? Now the Minister of Finance is saying this year, is saying that we couldn't get 30 trillion. Like we were short of our target. 30. That means you said you are making over 44 trillion in expected revenue. You only made 14 trillion. That's what it means. So now, 30 trillion was borrowed basically to finance that budget. Now, that is something similar to be expected again 2026. What we are doing is not sustainable no matter how you look at it, and that is a very scary approach.
Okay, we are definitely going to look into more details about the whole finance minister and the 30 trillion naira shortage. But what does this MTEF mean in real terms for Nigerian businesses and the common citizens? So
in the ideal sense, MTEF should be a framework. Because the way it works is that budget is an annual thing, right? By the end of the day, you also want to have a projection of what you want to do in the short term. That your budget will suddenly just have a level of harmonization. So, for example, if your plan, if as a family, for example, let me use a micro level, where a family, for example, wants to build a house that can transcend into 1 or 2 years. Right, the budget might be yearly, but you have to your plan. The overall plan is that we are building a house for this number of period, but we're going to break it down into different stages. Right, that is what the MTEF, Indian Town Expenditure Framework, should look like. But what we've seen over time is that it has always been used as a way to carry over. We get annual budgetary performances, right? So because we have an MTEF that's from 2024-2026, we realize that governments over the years would simply not do the work they are meant to do in 2024, carry it over 2025 because it's still within the framework. And that has always been what has really made us even more fiscally responsible than what it was meant for, which was meant for fiscal responsibility and long-term planning.
Another thing is that we always hear about budget, but when it comes to the implementation, at the end of the year, we should also be able to hear to what percentage was our budget actually implemented. Because you find out that this budget we were seeing 40 trillion, 50 trillion, 30 trillion, at the end of the day, might not even have up to 70% implementation. So if we have that, we actually understand that, okay, Nigeria budgeted 50 trillion for social year, and the fulfillment was just 35 trillion. So it gives us the perspective and say, okay, actually our what's it called, our revenue, if you look at it vis-a-vis the performance, is about 90%. Okay,
and that was what the Minister of Finance was saying.
So why borrow more to show up the amount which you did not fulfill?
Exactly. We wanted 40 trillion, right? And we only made 14 out of it.
Yes.
So we are shortfall of 30 trillion.
Yes.
Fiscal year.
Yes.
That is a scary number.
Yes.
So what we doing
is actually.
I think it's more than scary.
And we are going to discuss it and probably play the clip so that we could draw more conversations around there. But right now, even as lawmakers approve these projections on paper, global oil markets are flashing warning signals that could quickly test the realism of Nigeria's 2026 assumption. This is taking us to the next story, where global crude prices have slipped below Nigeria's 2026 budget comfort zone, with Brent falling to $58.83 per barrel and WTI to $55.04, making the lowest level since February 2021. This is below Nigeria's fiscal oil benchmark of $60 to $64.85, rising raising the risks to projected 54.5 trillion naira expenditure and 34.33 trillion naira revenue for 2026. Analysts from EIA, other places now forecast average oil prices between $50 to $55 per barrel in 2026, which is threatening a wider deficit beyond the already projected 20.1 trillion naira, which is 3.6% of the GDP, and worsening debt service cost. It's estimated at 15.9 trillion naira, nearly 50% of expected revenue. Now, Daniel, let me start with you. With global oil forecasts like clustering around $50 to $55, how realistic is Nigeria's 2026 budget benchmark?
We were seeing about, I think our benchmark is around $65 per barrel,
62, 64.
I think it should be reviewed.
What kind of review?
It should be reviewed downward.
It
should be reviewed downward, because now this is the problem in Nigeria. When we make the projection, we also made a volume per day production projection also, which is within we say 1.8 to 2.2 million barrels. And that alone is already a big issue, because if oil prices range now that everybody's forecasting it for that price. See, I'm seeing it going lower because $60 per barrel was a very strong resistance. There's a time it touched and it bounced back. It was as if oil producers wanted to hold on to that prices. But this is the issue. As soon as the more we are getting, we are looking at into 2026, that one of the biggest issues affecting global economy, particularly when it comes to oil, the Russian-Ukraine crisis. As soon as it starts slowing down, that means that oil prices, Russia will most likely flood the market because now it's able to sell it on as in legally. Then the issue is the supply. The supply would definitely outweigh the current demands from majority of these nations. Yes, you're expecting some of these nations to bounce back in terms of productivity, but it would not be that pronounced to drive prices back to above $65. So naturally now we should be expecting that $60 per barrel might become the new resistance, right? And that is a big problem. So we need to revise it downwards and back to $50, and revise it with the volume expected, maybe like 1.6 million barrels per day, and two things should happen. Our budgetary allocations is always based on what we want to spend, right? We will now start looking to balance it up with what we would make. That has always been the problem, right? So why do you want to spend so much when you don't have the money? You don't have all our projections of making money is always missing by almost more than 50%.
Are we even spending it? Is another question.
We are.
For what is meant to be done, what's meant to be used for. Because if you see that in 2014 our budget was around 4 trillion.
Yes.
And just 10 years later, we've gone beyond 1,000% in budgetary allocation, and the roads are not better. Power is not better. The only thing that have increased are Eloxes and Lexus, Jeeps for Congo. Yeah, and new Prados. I'm talking about making Nigeria 50 states. These are the things that have increased. So for me, I don't even think increase in budgetary allocation automatically results to increase in infrastructure. It doesn't correlate anymore. So why exactly are we increasing over and over and over? At the end of the day, we're not seeing the Nigeria that we're actually looking forward to. Another thing is that it's painful to have this conversation because majority, or let me say some of the countries that actually have crude oil in the capacity and volume that we have, they used it as a seed. Their country are almost weaned off crude oil. They see crude oil as a bonus.
Yes.
But here we are in 2025, going to 2026, and crude oil seems to be like our lifeline. Like if for any reason crude oil is no more in Nigeria today, it will be like chaos. Even me, I don't want such a thing to happen, because it's as if we don't actually know what else to do with the resources we have. So there should be an economic plan for the next 10 years, if we don't have, on how we can gradually wean ourselves off dependency on oil.
Okay, speaking about that, right? If oil revenue underperforms again in 2026, where does Nigeria realistically cut the spending? Is it in infrastructure? Is it in
There's Orason's report. Let them go and carry it. Because we can't keep saying the same thing every time. We know what to do. Everybody knows what to do. So why are we not doing what we're meant to do? Like somebody used to say on Twitter, everybody knows what they are doing. The Orason's report is there. Reduce government spending. How much of the whole budget actually goes into the standard of living, actually goes into increase in income, actually goes into capital infrastructure that we can see. I'm not talking about bus terminals. I'm talking about things that actually will generate for us as a country. Okay. How many of it? Because at the end of the day, you see 50-something trillion, and are the lives of people better? So you see that most of this expenditure is one way or the other related to government. So I think if there's going to be any cut, it will be coming from there.
So for the average Nigerian, right, what does a prolonged oil slump in 2026 mean? Is it about higher taxes, reduced government services, or increased borrowing that can be passed down as inflation?
Yes. Okay. So I think was it the IMF that gave a projection that will probably see 26% inflation in 2026, and that is and I think IMF is spot on with the analysis, because what will eventually happen is this: there might be a need for the government to devalue the currency at some point when these oil prices become this much, right? Because you would have to be able to you get to a point whereby you don't know you don't know how much we'll keep borrowing at this rate, right? The rate at which we'll keep borrowing is going to be more sporadic than ever, right? And this is another reason why our interest rate is still high, right? So imagine having 14% inflation figures, and you're having almost double of it as your interest rate. So that alone is a problem for Nigerians. So Nigerians should expect an harsher economy that has low inflation data but has high cost of living data. So whatever we can marry that, it's still high inflation.
You can go to church to marry it.
It's still high inflation for the people. It's still high cost of funds, high cost of everything, which will still translate into inflationary pressure. So where we are now, and that was the bet I said that the government took in 2023, that if it doesn't work out fine, it becomes chaotic. And that was the bet I said. I said that subsidy, that we say yes, economic wise, it causes imbalance, causes so many things. But remember, that was the only thing that the government was doing directly that was affecting the life of the people directly.
Yes.
Because the government having money in its hands has not shown in recent times that it's capable of implementing that money to better their life directly.
Direct cash transfer.
Exactly.
No. We have direct cash transfer.
So the only thing that was benefiting them directly was the subsidies, low prices, and that has kept them to have more disposable income to keep consuming, and the economy kept on going, right? Kept on growing. And
now we have turned to sachet economy.
Now we've taken the bets on the economy. Oil prices and all those things that would depend on to help us are no longer there. So where are we now?
Okay. So as global oil prices dip below Nigeria's 2026 budget benchmark, threatening revenue and widening the deficit, the pressure on the country's key economic sector intensifies, most recently reflected in leadership shakeups in the oil and gas regulatory space. This is taking us to the popular story because it is popular. It has been trending for some days. Farouk Ahmed, the CEO of the Nigeria Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, and Wenga Komolafe of the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, have both resigned following the allegations of corruptions by Aliko Dangote, the president of Dangote Industries. Dangote accused Ahmed of economic sabotage, collusion with international traders to undermine local refining, and misappropriation of public funds, citing $5 million spent on secondary education and upkeep of 4 children in Switzerland, plus $2 million on tertiary education, including a $210,000 Harvard MBA in 2025. Presidential spokesman Bayo Onanuga confirmed that President Bola Tinubu has nominated Engineer Saidu Aliyu Mohammed for NMDPRA and somebody else for NUPRC, requesting Senate confirmation. The ICPC has received a petition demanding investigation and possible prosecution under Section 19 of the ICPC Act. Now, this has been trending. I think a lot of people have been making a whole lot of tweets about it, giving their hot takes on that. But let's take a moment to hear from Aliko Dangote himself, as he publicly called out Farouk Ahmed over allegations of corruption and economic sabotage, providing the figures behind his claims.
Nigeria's economy, the global market, what does it all mean for you? From stock market insights to global financial news you need to know, from Wall Street to the main street and of course the marketplace.
Get the answers you need every week on Business Lens with me, Faith Joseph, as I bring into focus the stories, strategies, and shifts shaping our economy. No angle is missed as I talk about the business, the people, patterns, and possibilities behind them. Welcome to the Business Lens.
Rapid TV, rooted in truth, driven by impact.
People selling at 9, 10, 9, 20. but that's not the price. The NMDPRA has issued reckless licenses. Nobody issued licenses at the middle of the month, so they are now ready to issue license for about 7.5 billion liters for the first quarter of 2026. Did we stop anybody? They issued 47 licenses. The few modular refineries that are doing, those modular refineries, I can tell you for nothing, they are almost on the verge of collapse. Malam Paru has 4 of his children that he educated in Switzerland at the cost of $5 million for their secondary school education alone, not university. And I know that one of them just finished Harvard. You know, when these questions are answered, before we go to the court, he should come out and reply.
Okay, we have Chinedu Okoye on the Zoom. You're welcome to the show, analyst Chinedu Okoye. Are you here? Okay, good morning and welcome to the Business Lens, Chinedu.
Good morning.
Okay, so I'll be starting with you, right? What does this high-profile resignations mean for Nigeria's downstream and upstream regulatory stability, especially amid efforts to boost domestic refining? You saw the video that we played, because we are talking about the whole allegations that led to the resignation of the NUPRC and Farouk's resignation, the allegations by Dangote. Chinedu, can you hear me?
Well, first of all, can you hear me?
Yes, we can now.
Hello?
We can hear you.
Okay. Okay. So, first of all, if an allegation is placed on me and I am innocent in my workplace, I wouldn't resign. So obviously, there is an element of truth to that, and I think that there's obviously it gives a sign that there's probably some deep level of corruption, in our oil industry, and these kind of whistleblowing from influential investors in the industry is necessary, because we need to deal with the rot from within. So I do believe that if Mr. Farouk was innocent, he wouldn't resign. So the resignation alone points to the fact that there might be like some truth to it. And like I said, I believe this kind of whistleblowing and from influential investors or individuals in the industry is necessary for like an enhancement of fiscal discipline in the most strategic industry in Nigeria, that's oil and gas.
Okay, let me come to Daniel, right? How might the allegation and ICPC investigation affect investor confidence in the oil and gas sector ahead of 2026?
I think it has played out. It has played out the right way. I think allegation of corruption is not limited to Nigeria. However, I think what has happened, or has always happened with Nigeria, is the fact that like when these kind of allegations are made, it's business as usual still happens, and everybody just behaves as if nothing happened, right? So the fact that there is a resignation and there's someone taking over almost immediately shows that shows some level of transparency. A businessman called a regulator out, right, and this happens. However, the reason, one of the key issues why even we're having this conversation, right, it is this public, I'm sure it's because we've seen some level of inefficiencies from the NPRC and the NMDPRA. The chaos we've seen the last 18 months since the refinery has really opened up the Nigerian oil sector to the entire globe. Now everybody's seeing it. Before it was always an NNPC conversation. I know anything NNPC says to anybody is what everybody accepts. Right now, that is a business that is being affected. About $20 billion invested. There is now this touchlight on regulators and players in that space, and that is why if they've been efficient, I think that we're not even gotten to someone going to do a public conversation like this, and that is where the corruption really comes in. So, even though I'm not necessarily concerned about a lot about the corruption, because I feel corruption happens every sector in every country globally. But it is the inefficiency that it breeds that is the problem, and we hope that this will be the end of such issues, right? Because whatever Dangote is complaining about, that's affecting the landscape, not making the business go as usual, not making Nigeria independent in terms of energy security conversation that we should have. Then there should definitely be something that has to be done about it, not just resigning the head. We might have a lot of other people underneath them, so it should be an overview of the entire activities of those regulatory bodies, basically.
Okay, so let's move to the tax part, because I saw that some people are making tweets back to back concerning the fact that House of Rep member came out to say that, oh, this is looking different, entirely different. I don't know if you saw it. It has been trending on Twitter, and he said the tax is looking different. The one that I voted for is looking different, and it's looking like the one that National Assembly signed is also looking different. What is going on? Speaker, come and look into this matter. So, and people are now revolting against it. No, so now with the proposed VAT increases from 7.5% to potentially 12.5% in 2026 and 15% by 2030. Now, amid rising poverty and business strain, how can Nigeria balance revenue needs against economic pain for households and SMEs? Mr. Abiola.
I only make one statement. You cannot tax your way out of poverty. Daniel can be adding that, because I don't know what else to say. You can't tax your way out of poverty.
There is no, even though the VAT has some exemptions, a lot of exemptions now. Agricultural products, education, and so many other components are taken out of the VAT.
Even me, I'm doing agri.
But it is still, I don't even necessarily have issues with VAT, because VAT is a function of business activities.
So where are the manufacturing companies? Where are the industries?
Exactly.
Who do you want to tax?
Exactly. So if you don't have an increase in economic activity, VAT is almost non-evident. So more often than not, I think we should be questioning government. We've done 2 years. You did part of 2023, part of a full year of 2024, and full year of 2025, and in all this you've done over close to 80 trillion in budgetary allocations, in budgetary.
So how can the government improve?
Why are we not having a better infrastructure from 2023 till date, even after suffering subsidy removal, devaluation of the currency? Those are the questions that we should be asking now before any tax, anything is approved.
How should Nigeria improve? They know what to do now. I told you once of the story of a governor that refused to invest in a certain type of crop that is an economic tree, because the gestation period before it starts, bringing out fruits is longer than his term in office. So they are not interested in anything that would be long term and eventually yield out fruit. The process is what would bring us money. Nigeria is used to anyhowness. Nigeria is used to always rushing to everything, and you see countries that actually go stage by stage, order by order. They have gone far ahead of us that like rushing. Even if on the express somebody wants to overtake you, that is when you know that your accelerator is inbuilt. So we need to sit down and start doing things properly, even if it will take us 10 years. Let's plan it and do it, and we'll see the results.
Okay. Quick one, because we don't have plenty of time. I had the videos. I wanted to display the videos so that we could look at them while we have this conversation. But unfortunately, our time is fast spent already. But before we go, right, briefly, how does this 30 trillion naira shortfall and persistent revenue forecasting risk impact Nigeria's economic outlook and fiscal planning for 2026 because of the whole situation with Wale Edun, when he was saying that we generated 10, 14 trillion naira instead of the actual amount, which means that 30 trillion naira is shortened, and people are not even understanding. And then we had President Chinedu come in August and say, oh, I can now brag, we have actually met this target. But how does this shortfall affect Nigeria's economic outlook in 2026?
Okay, so for me, I think that how do I say it? We are beginning to see that we should start looking at every information that comes from the government. We have to start double checking, and that's why I'm really not happy with the coordinating minister of the economy. We don't have data of your budgetary performance since 2023. right? We don't have any. There's nothing anywhere. The only body that's the only agency that still gives us data is the DMO, the Debt Management Office, to tell us how much we keep borrowing. MBS is data for the entire economic data and all, but for budgetary spending, budgetary performance, you get evaluation of budgetary performance. We've not had that data, and coming out to now say this, it get shows that what the president said in August was propaganda. And the president did not basically get his data right before coming to celebrate a 20 trillion that was pushed around and was creating a great buzz in the market that yes, Nigeria is beginning to get it right when it comes. And now suddenly 6 months after, we're getting a different figure. It is a very bad omen going into the new year, and it's becoming obvious why the CBN has refused to even drop interest rates, even though it shows that from the data from the MBS that inflation is coming down. Right? So how do we really begin to trust whatever comes from the government is a very big issue going into the new year.
Okay. Thank you so much, Daniel, and thank you so much, Abiola Adekunle.
Merry Christmas, Alex.
And thank you so much, Chinedu Okoye. Please join us again on Monday at 11 a.m. because this is where we draw the curtains on the business lens on Rapid Television Abuja. My name is Divine Alex. Stay with Rapid TV.